Hello, welcome to the latest video from stageanalysis.net. This week's video is going to be about the US market breadth update, and I'm also going to be covering a bunch of stocks to watch, such as PINs, FSLY, BYND, Bloom Energy, Wrap Technologies, and Arlo. So let's begin by doing the market breadth update. So we'll start as always with the S&P 500. So as we noticed on the last video I did of the market breadth update, it was way back a couple of months ago when we were doing the stage 2A breakout, and obviously I highlighted that the market was potentially breaking out into stage 2 and we could go higher. And obviously we've made that initial stage 2 run, we made new highs, and now we're in the initial stage 2 pullback. So obviously you never know where the pullback's going to end, and obviously the stage 2 breakout could completely fail, but at the moment we're still in the pullback phase and we're still above the initial breakout. So we would normally expect some basing action to start occurring around the current levels and around the breakout level. So that's something I'm watching closely at the moment. The Nasdaq has continued to be has been the strongest market throughout the year, but the pullback, it's had a bigger pullback than the other markets, but it's still not had a huge pullback considering the massive move it's had, and the stage 2 advance has been obviously extreme in quite a lot of growth names that live in the Nasdaq. So some of them are getting hit quite hard on the pullback, but there's also, with the pullback, we are now obviously starting to see a lot of new bases forming, and so some of those are quite fledgling and some are not formed at all yet. But depending on how long the pullback takes, we could obviously start to see some basing action going on in the leading stocks that obviously reside mostly in the Nasdaq at the moment. So we'll see what happens there, but I'll highlight later in the video some of the stocks that I'm watching that have been leadership names and are showing some really nice relative strength and basing patterns. Next we've got the NYSE. So this has been sluggish all year. As you can see, the relative strength continues to underperform. We've had a slight bit of outperformance, but it's still below a declining zero line. We've still got a declining 30-week moving average, and it's pulled back to its 10-week rising 10-week moving average here, and it's just around its stage 2 breakout level here. So it still remains weak and still in a zone of resistance. So not much to say on that one at the moment. And the small caps has been the weakest of all. Still, but we've got a declining 30-week moving average here. It is above, but it still remains in actual stage 1. It never actually made a stage 2 breakout like the rest of the indexes have. So the small caps have been the underperformer of the year, and it's actually closed 2 weeks now below the 10-week moving average, and it's still below a declining zero line on relative strength down here. So you can see the relative strength has flattened out throughout the year, but it's still underperforming. So next we've got the commodities and the treasuries. So starting with the treasuries over here, it continues to consolidate in a very, very tight pattern. Like whether it's in obviously a stage 2 advancing phase near its highs. Whether it will break out to new highs is unknown. I've got a position in this in my pension account at the moment, but yeah, we'll see with that one. But it's still in stage 2. Gold is still in stage 2 as well. We've got a bit of a flagging pattern going on up here, so it's near the highs and it's been consolidating for 5 or 6 weeks now and sitting on its rising 10-week moving average. We've still got strongly rising 30-week moving average and 10-week moving average. The relative strength is still reasonable above a rising zero line, so we could see a further breakout in gold to new highs, but also we could see a push down there. So it's an unknown at the moment, but it's in stage 2, so you stay with the trend. Oil had a rebound this week back to the 10-week moving average and got a slight close above it. Still got a declining 30-week moving average, and it's still below a declining zero line. So it's been, obviously it had some massive outperformance in April as it sprung back. So it's plateaued for the last 4 or 5 months now, and it's in a consolidating sideways range underneath the resistance. Copper continues to make a stage 2 advance. We had the initial stage 2 breakout here back in early July, and then it pulled back and rebounded at the 10-week moving average, and obviously the breakout level support, and has moved higher since. So this is in a steady stage 2 uptrend. The relative strength is above a flattening zero line here, but it's not setting the world on fire in terms of strength. It's outperforming, but only averagely outperforming. Next up, we've got the percentage of stocks above the 150-day moving average table that I do. This is a custom thing that I do for all the major sectors each week to see what's going on and what sectors are leading. And so, as you can see, we've got some very strong in basic materials and consumer discretionary, both above the 80% level, and industrials and technology are both fairly strong above the 70% level as well. And we had a big move this week in tech, so which is obviously opposite to what the market action was doing. Obviously the market was down, and we had a good 9% gain in the tech sector this week as it moved up, with stocks moving back above the 150-day moving average. So healthcare had the biggest move of the week and moved back above the key 60% level. So we've got the majority of stocks above the 60% level, with 65.55% of stocks above the 150-day moving average. So we are in the stage 2 zone overall still, even though we're in a pullback phase in the market. So this is the under the surface levels that we look at. So this is a visual representation of what that table shows. So as you can see, some of what have been the laggards of the year, the financials, energy and real estate, have now started to move up into they're in the neutral zone now, and utilities, and basically the majority of sectors are now in the bullish zone, and we've got obviously discretionary materials back above the 80% level, which I have as the overbought zone, but it's just strong. It's strong bull basically, but you don't stay above that level for very long. You'll tend to have little peaks above it and then come back down into the 70s when it's in a strong bull phase. So generally when there's a stage 2 phase and a bull market, you tend to the majority of sectors will live in the 60 to 80% range. So next up, we've got the NYSE Bullish Percent Index and the Nasdaq Composite Bullish Percent Index at the top here, and then at the bottom we've got the percentage of stocks above their 200-day, 150-day and 50-day moving averages in both indexes. So as you can see, I like to look at these as a whole, and because if you look at them I know a lot of people look at individual ones. They only look at the 50-day moving average, or only look at the 200 moving day average. But as you can see, they give you different information at the same time. So obviously, in terms of the longer term trend, we've been trending up, and we broke out again out of the base in July. So we're above the 50% level in the 200-day, percentage of stocks above the 200-day, and same in the Nasdaq. It has pulled back, but we have held above the 50% level there. The key one for me is the 150-day moving averages. So this has been strong. We're up at 70% in the NYSE, and although the Nasdaq has pulled back, we're still above the 60% level. So the majority of stocks, as we showed in the previous sector ones, are above 60%. And the short term, we've had a pullback. We've been on a bear confirmed for a little while now in the short term, but we're still holding at reasonable levels in the NYSE at 50%, and the Nasdaq got further down and has bounced back up and is at 43% currently. So that highlights that we've had a short term bearish move, but the medium and long term has been trending higher, even though we've had that short term pullback. So it doesn't show anything too sinister at the moment. It just shows that we're in a stage 2 zone, and we're moving higher in a pullback phase. So these 6 charts at the bottom here, I do a collective of these. I combine the data into a single chart each week, and this is what I call the US total percentage of stocks above their 50, 150-day and 200-day moving average combined chart. And this is all of those 6 that we highlighted, these bottom 6, like all of these figures. So here, so you've got the, what was that, 53, the 69, the 50, all of these added up together and averaged into one single chart, and then with a 50-day moving average and the same zones. So I have like the bearish zone below 40%, the bullish zone above 60%, and the neutral zone in the middle here. So we're currently living just below the 50-day moving average, and we're in the neutral zone, what I call the neutral plus zone, which is above 50%. So we're at 55% currently. So again, this highlights the pullback in the market that we've had, but nothing's fallen apart. We're still in the upper half of the chart. So we're just in a neutral zone. Obviously, if we started breaking below this low here, then obviously I would start to get a bit more concerned, as that would indicate that we were starting to see some weakness come in. But at the moment, we're just in a consolidation phase, like around the 50-day moving average in the upper half of the chart. Another way of looking at these percentage of stocks above their moving averages is to use the 20-day EMA charts, which Stock Charts does. We've got the GT20 NAS, which is the Nasdaq percentage of stocks above their 20-day EMA, and the NYSE stocks above their 20-day EMA. We've got the NDX 100 down here and the SPX. So the 2 top ones are obviously the majority of stocks. This is the broad market. I also have the bot on the lower half. I have the indicator where it's the relative strength versus the S&P 500 for each. So as you can see, during a major pullback, you tend to get down into the lower zone and stay in the lower zone for a while. And you can see on the relative strength will stay below the 0 line here. And so as you can see on each chart, that during the February March time, when the breakdown happened, we got into the lower zone below the key 30% level, and we stayed down there for a while, and the relative strength stayed below its 0 line in each case, with a little blip on that one, on the shorter term Nasdaq 100 one. But basically the signal to go back long again is once you get back above the key 30% level, and the relative strength line also gets above the 0 line at the same time. So as you can see in these, it was a little bit what's that, around April 6th to 10th sort of range down there, somewhere on that 6th to 13th week, we started to get moves up back above the 0 line, and we were breaking above the 30% level after being below there for a while. So you can see only the Nasdaq 100 is below the key 30% level at the moment. The others have pulled back. The Nasdaq did get below the 30% level, but immediately bounced. But you can see the relative strength here has stayed below the 0 line. We are below the 0 line on each of these. So obviously our signal would be a move back above the 0 line on each one to obviously get more aggressively long again. But at the moment, it's more of a tentative period. And next up, we've got the advanced decline line. So this is the NYSE advanced decline line, shown in multiple ways that I like to look at. So we've got the standard advanced decline line with a 50-day moving average. As you can see, this has been consolidating sideways near the highs. It's near the 50-day moving average, but we haven't broken below. So we've got a nice positive divergence compared to the price action in the market at the moment there. The momentum index is down here. So this is the 200-day moving average momentum index. This is what Stan Weinstein called the momentum index in his book. And this is the shorter term 10-day momentum index, which obviously gives you a much more quick oscillator. And obviously when you're in a strong bull, this will be in the upper half breaking out. And obviously we can see when we're in a neutral phase, it tends to consolidate around the 0 line. As you can see, during our March-February pullback, you got well below the 0 line and trended lower for a while. So nothing too sinister at the moment there. The McClellan summation index is similar to the momentum index over at the short-term momentum index over here, and the oscillator. So see, this has been on a bearish signal for a little while now, pulling back short-term, but we're still above the 0 line here. The oscillator is below the 0 line, has been below for a little while, so obviously highlighting it's been bearish in the short term. But the 10 and 30-day EMA has not crossed over to the downside yet. So as you can see, this crossed above in mid-April and late April, and has stayed above since. So this has been on a bullish signal since then. So you can see the pullback has got the moving averages close together, but this remains on a bullish signal currently until it breaks down or continues back up again. But as you can see in other periods like 2019, it can often get on pullbacks, they'll get close together and then we can move off again. So it all depends on what happens elsewhere, but for now this is a fairly mixed signal. The next up is the US new high, new lows. As you can see, the new highs have remained fairly tentative throughout the entire advance, as we've had a mixed market with obviously strength in only a few sectors, whereas there's been quite a lot of sectors that have lagged behind. So we've not had a huge amount of new highs, which you would normally see during a healthy bull market. So as it still remains a very fledgling stage 2 bull market, but the cumulative new high, new lows obviously broke above in May here and has continued to make new highs. So it's a good sign. On these lower ones, this is the NYSE 52-week highs and 52-week lows, and so the red is the lows and the grey is the highs. As you can see, there's not been much pickup in the lows for a long time, and the highs have managed to get above the key 100 level for quite a while in the Nasdaq, but the NYSE still remains very tepid. So again, this remains fairly neutral still. Okay, that's a lot for the market breadth. Let's get into the next phase, which is the stocks that I'm watching at the moment. So first up, here's pins. This has been on my radar for a little while. I did have an initial trade in it early on after the gap up, but I exited early on the market weakness. So, but this has continued to set up and shows good signs of accumulation, and there's not been any major selling action, as you can see on the chart here. So we had obviously the gap up on earnings here, and then you can see we've had obviously a very tight consolidation pattern, and it's let the 50-day moving average catch up to the price action, which has pulled up to the bottom of the base now. We've got the IPO advance high here, which is this dotted line on the daily chart. You can see we're consolidating above that at the moment. We're near to potential breakout level again. We had a little pop in volume again on Friday, and the relative strength, as you can see here, is making new highs ahead of the price. And the one thing I really like about this at the moment is that obviously we're above the IPO advance high here in the turbulence zone, but we got a weekly closing high here. So it's hard to see in the daily price action. You just see the mess of the base, but in the weekly you can see we actually had a closing high with the weekly here. So it actually had a breakout on a closing level. On the monthly chart down here, you can see it's consolidated in a quite tight fashion over the last month. Bottom right chart here is the 2-hour chart. So I like to do a multi-time frame approach. Obviously, use the 2-hour chart to refine the entries on the daily charts. So with the volume by price action to show where the support and resistance levels are. So as you can see, we're above where the majority of the price action is traded, where the volume has, and obviously if we get a breakout above here, above this 38 level, then obviously it'll be game on again, in my opinion. So I'm looking to trade this one this week if it breaks out on volume. Next up is FSLY. So again, this is another one I traded. I got in at an earlier point. Can't remember exactly. I think it was a early breakout around this level down here, but it popped and then pulled back, and we didn't make much progress. And I think I exited for a small loss as it was making a bit of a head and shoulders pattern, but that seems to be negating. It still seems to look like it's building a solid base. It did obviously have a huge run up from its stage 2A breakout on the weekly chart here with over 380% there to the breakout to the highs. So you can see throughout the base here, obviously we had this big shakeout week, which was obviously a signal for me to get out at the time, but it's now quietened down. The volume started to get lower, and starting to consolidate. And the price action, you can see on the volume by price action here, we've been consolidating like the majority of stocks have been trading hands in this very tight 85-75 range here. So we are below the 50-day moving average here at the moment, but if I put on the ATR levels, we get a break above here, and we get a close above. I think 91 on the daily price action. Then that would be a potential early entry point for me. So I've highlighted on the 2-hour chart down here. You can see you've got a downtrend line, and you've got this level down here. So a potential early entry point with a break above into this zone here. And obviously, if you get back above 100, then that would be a major breakout back above the base again. Obviously this level up here is less relevant, as it was just a pop and drop on the earnings bit. So these two levels are the levels I'm watching, and I would be personally, if there's a breakout here and we get some very heavy volume coming in at the same time, then I'll be getting long in there for a potential trade with a stop underneath the base. So next up, we've got Beyond Meat. It's another one that I've been watching for quite a while, and I did trade earlier in the year as well on the initial breakout, but it didn't make much progress, and it's been forming this cut pattern base since. It was quite a volatile one to begin with, but it's consolidated nicely. You can see the volume has dried up in the base, and we had some volume pops on some of the up weeks here, and you had a little bit of what we call a mini low cheat breakout in here, where it's broken out of the lower part of the cup before it's formed half of the range. So it's already up here and moving into a potential cup and handle pattern forming. It might not, it may continue higher, it might break down again, but we're above the now rising 50-day moving average and 200-day moving average down here, and we've got obviously an alert level set up here above this high. So if it breaks this top of the handle here on volume again, so again the key is on volume. I want to see, like we saw down here, this early breakout. I think this is the one I traded. It's when you get a breakout above the pivot on volume. So if we get the same here and we get a big jump, we have some volume up in these levels, then I'll be very interested again. As you can see on the monthly, we're obviously hitting a trend line here. And on the weekly chart, I've marked this one up with the life cycle trade terminology. So we had the IPO advanced phase, and we got the institutional due diligence phase, and we've had a double bottom base with an undercut. So obviously ideal pattern there for that. And then we've made a little stage 2 breakout up here, and it's been pulling back and held at the 30-week moving average here, and the volume's been drying up. So this could make a nice stage 2 continuation breakout, or if you're using a life cycle trade terminology again, you would be into the institutional advanced phase if it made the stage 2 continuation breakout. So as you can see on the 2-hour, majority of the price action is traded down in this level down here. So we're into this breakout. The mini low cheat that I highlighted breakout here has got us above the bulk of the basing action. So we're into a lighter period here. So yeah, watching this one. So set alerts up here and watch for volume. The breakout needs to have volume. Do not buy breakouts without volume. That is tip of the day. Right, next is BE. This is one I've been watching for quite a while now, most of the year. I've highlighted it many times on my thread on Twitter, and yeah, I'm not sure if I traded it. I can't remember if I had an early trade in it or not. I think I did actually. I think I had an early trade and it failed, and so I got stopped out, and it's now setting up for a potential another breakout. I did look to trade this on Friday. I had an alert set on the daily chart down here at just under here, and it broke out, and I was watching on the intraday chart at 16, and I got distracted, and then it broke, and it broke up to 16.5, and I had to let it go because it was already up 13 or 14% for the day. So on the initial breakout, it was up around 10% there. But as you can see on this 2-hour chart, look at the volume compared to other days. So we had the breakout there, and even though it was in the first 15 to 30 minutes of the day, like you can see on the 2-hour chart that's exceptional volume. And so I missed it. It was I had it literally on the screen and I was going to trade it, but yeah, it just moved too quickly for me. I wasn't paying close enough attention. So that's what happens with breakouts. So but you get more chances. So that would have been a nice early entry point and it would have already been up a good 10%, but so be it. We're now into, obviously we've got a little volatility contraction on the daily chart here. It'd be good now after this big 18% move in a day to see some sideways consolidation in this range up here. As you can see with some of the price by volume action, this sort of 17 area here has had a lot of volume. So hopefully we can get some sideways action for a week before breaking out higher again. But if not, this one, as you can see on the weekly chart, it's been making a, what we got there, so good 8 or 9 weeks here of basing above the stage 2A breakout level, and so it's made a very nice base, and it's ready to make a stage 2 continuation breakout, which would move it up towards the turbulence zone, where they're near the IPO high. So, but that's another good 100% above where we are currently. So although it looks small on here, that would be 100% trade to get up to there. So there's a lot in the tank on this one, and as Weinstein says, like the bigger the base, the better. And you want to see some. Obviously, we've had a huge base here with it moving all the way down to, I can't even see what level that is. It's probably like 3 to 14 there. It's up, I don't know, hundreds of percents there. I haven't got the arrow to do the exact calculation, but it is literally like tripled in price. So in the base, so this one could be a fireball and could obviously have a huge stage 2 advance if it gets going. There's been some clear signs in the volume on the up weeks when it's tried to break out. So you can see here we had obviously some initial massive moves, and like last week again was another massive move in the volume. So I've highlighted on the dailies these nice big volumes. So that's institutional investors coming into this stock. Like it might have rubbish fundamentals, but it's clearly getting some big interest. So that's one to watch. Okay, next up is WRTC. Again, this is another one that's been highlighted on my Twitter feed multiple times throughout this year. So Twitter feed is @StageAnalysis. I've been watching it closely for many months, and I can't remember if I traded it once already yet, but it's basically, this one is sitting around the IPO high. It had a stage 2A breakout up here, which I highlighted at the stage 2A breakout level, and it had a good 80+% run up before giving back the entire initial advance. You see this a lot with stocks that have a big move into the stage 2 advance. So stocks that break out into stage 2A that haven't had a consolidation before the breakout will often make an initial strong move and then pull all the way back. So that's something you need to consider if the stock has had like a huge move out off the lows and then into a stage 2 breakout. So obviously a lot of people I notice don't see that, and they basically go straight in, and they then wonder why it's pulled all the way back in. But that's a fairly normal pullback from obviously off this low level here all the way up to here. It's given back less than 50% of the actual this move, so which is normal in any kind of bullish advance in stage 2. You want to see it give back less than half of the entire advance. So you can see where with this one the pullback was quite big, and it's been trading below the 50-day moving average for a little while now, and the 50 days started moving lower, which might put off a lot of people. But you can see we've got this little double bottom pattern coming in here, and it's literally trading around the stage 2A basing level. So a break back above here and a back above around 10 would on volume. You want to see some heavy volume coming in. If it does hit that, it basically is it'd be a big move, but that would be key. You need strong volume, so we want to see like at least 2 or 3 times the average daily volume. 10 times would be better, as much as possible. But yeah, at least 2 times the average daily volume coming into there, and obviously a breakout above the 50-day moving average and this level up here, which is around 9.65, I think. So, but yeah, I've got alerts set up in this zone up here. So if it starts getting close to this level, I'll more than likely highlight it on my Twitter feed. But yeah, set an alert and look for volume coming in, and because this one could go again. It's had been a bit of a fireball out of its stage 2A advance. So generally, if it goes again, it could have a equally big move. So the 2-hour chart down here shows that obviously you can see the stage 4 decline on the 2-hour chart, which is this move here on the daily, and then it's formed this little base in action down here. So we get like a stage 1 base forming on the 2-hour chart. This is a technique I like to use on pullbacks. I think it's a very good way to time the pullback entries. So because you never know if the pullback is going to go just stop at the breakout level, whether it's going to pull further below it and then move back up again. A lot of the time the pullback will move below the breakout level, as you can see here we've got, and then it's pulled back further. And so you watch on the, well, I watch on the 2-hour chart for the stage 1 base to form, and then you can get early entry points potentially. So we've got a mini low cheat down here, because you can see it's formed a little cut pattern with a little handle here. You see the volume dried up in the handle there, and then it's had a little pop on volume to close at the end of the week. So that's a low cheat, like early entry point there, but it's still within a stage 1 base on the 2-hour chart. So as you can see here, a break above this level here would be key, with a nice strong volume pop. So if we see a move above here next week, then that will be the signal for me to obviously test the trade on and get long. So okay, next up we've got Arlo. Again, this is one I've been highlighting a lot on my Twitter feed on @StageAnalysis on Twitter, as this made a stage 2A breakout back in late July, August, early August here. So I see it made an initial attempt here, but it was a big move up. It literally doubled in a couple of weeks to make the stage 2A breakout. So as I was just talking about on the previous one, when you have a big double or triple of the stock from the low to make the stage 2 breakout and to get through the resistance, then you're often going to immediately get a pullback, and it's going to pull back the entire way back to the breakout level. So with this one, it's been pulling back. It did try to make an initial continuation breakout early, but it got rejected straight away and has formed a fairly tight base in here. So as you can see, we had another mini low cheat where it broke out above the 200-day moving average there from a little shelf after making a sort of cup type base down there. You see on the monthly, the stage 2A breakout showed on the monthly with a break below all of this resistance down here. And on the 2-hour, where the pullbacks happened, we had a stage 3 top here, and we rolled over with an initial stage 4, but the stage 4 was rejected obviously at that support, and it started to form a stage 1 base again down here. So this one, we had a stage 2, stage 3, little very small stage 4 rejected, and starting to form a stage 1 base again down here. So as you can see, the relative strength from the 2 hours got back above the 0 line here, and on the weekly and the daily, it's remained above the 0 line and quite a long way above it as it's consolidated. So this one, again, I've marked up with the life cycle trade terminology for you, as well as stage analysis. So because I think they go very well together with IPO type stocks. So we had like a pump and dump pattern from the life cycle trade, where on the IPO it immediately fell, and obviously fell significantly from the IPO day, and then moved into the IDDP, which is the institutional due diligence phase, as it started to move into its stage 1 base down here. And then with obviously the weakness with the market breaking down, we had a flush out into a stage 4 continuation breakout, and then it started to form another stage 1 base and broke out again into stage 2. So we are not again into stage 2, broke out into stage 2 for the first time. So we're now in the early part of stage 2, and we're making the first stage 2 base. So we're looking for a continuation breakout to new highs here, which would be obviously very good in this fledgling young stock, and obviously if we got back above the key $10 level there, it would start to get much more institutional interest, as they generally don't tend to trade stocks under $10. So, but yeah, this is definitely one that's caught my eye, and obviously we've had a lovely 2-year base down here, and it would be moving up. It's making the first mature base in this stage 2 here. So okay, that's the end of my stocks to watch for the week. I just wanted to finish the video by highlighting the stage analysis course on udemy.com. So I've created a video course which is 3.5 hours long, which teaches you Stan Weinstein's 4 stages and the ideal entry points for the investor method and the trader method. So this is part 1 of the video courses that I intend to do. I'm going to follow on with some other courses about how to get into breakouts at the right entry points, and using multiple time frames and market breadth, etc. But the initial course on udemy.com, you can find it by looking up stage analysis, and I'll put a link. Actually, use the link below, because that will take you directly to the page, and I'll put that in the description below for you. And so yeah, this is the kind of I basically go through some of the historical big stage 2 advances, and also the 4 stages. So it's a good way to learn Stan Weinstein's stage analysis method, especially if you've already read the book, as obviously it goes into much more detail and gives some real world examples from newer issues. So obviously we run through Tesla and Apple and Amazon's historic 3,500 move percent gain, and also obviously what you have to do to endure a major stage 2 advance, like the depth of the pullbacks and where the stop loss points are, etc. So check that out, and again, I'll leave the link below. And if you want to please like the video, and give us a follow on Twitter at Stage Analysis, and I'll see you on the next one. Thanks for watching.